It's 8:02. I think we're up on the Zoom. Okay, Ms. Cruz, good morning. Thanks for getting us all set up. And could you please call the roll?
Certainly. Representatives Baker.
Here.
Gray.
Here.
Hallinan.
Here.
Henderson.
Here.
Jennings. Roscoe. Sweeney. Yen. Mr. Chairman. 9 present, Mr. Chairman.
Okay. Well, I'm kind of here, so that could be 8, but no, appreciate that. Okay. First bill for our consideration is Senate File 85, Property Tax Report and Exemption, brought to us by Senator Ellis. Good morning, Senator.
Good morning, Mr. Chairman, and good morning, committee members. I bring you Senate File 85, and this is a bill that I have been working on and been familiar with in my entire time serving on the Revenue Committee during my last term. And you'll recall that a few years ago, we hired the Alvarez Marsal Group to do some work for us in identifying efficiencies that we could implement in our state government. And so one of the areas they focused on is business personal property tax. And unfortunately, we hear the term property tax, and I think people get really alarmed. What does that mean? You have real property, which is land, and then personal property, which are things. And when we first started working on this issue, people saw personal property and there was concern that we were going to try and tax new things that you'd bring into your house. Dog houses, I saw somebody put in an email as a reason to kill the bill. And so to be clear, that's already exempt in our statute. That is exempt in our statute. We are not trying to tax things in your home. But right now we do tax the things that people use for their businesses. So over the years in the Revenue Committee, we've tried to make this shift of talking about it as personal property and talking about it as business personal property. And so along those lines, Wyoming is a self-reporting state, and under 3913-107A Romanet 1, this requires our county assessors to obtain from property owners a full and complete detailed statement of the amount of taxable property each year. And so last night I sent you an email. If you've never seen this form, it's standard, and they're supposed to list every item with the fair market value of each item in the business. So as we started looking at this issue in the Revenue Committee over the years, we started dissecting who's actually paying the tax. And so I did email you a chart that was prepared by the Park County assessor, and it shows we divide our tax accounts into oil and gas accounts and personal and leasing accounts. And in total, there are about 38,000 accounts in Wyoming. If you drill down though on where the money's coming from, if you're a taxpayer that pays more than $1,000, these are your large taxpayers. They account for 96% of the $134 million that's collected by this tax. On the other end of the spectrum, if you look at the very small tax accounts, they're about 7,000. They generate $47,000, and that's a 2019 estimate, or roughly 0.04% of the entire tax. And so I think it makes sense when you think about an oil and gas operation, a coal mining operation, a large farming operation. When they bring in equipment, it's clearly used in the field for production of their work. A farmer, a rancher brings in a tractor. That's a large item. It's got depreciable value. It's pretty straightforward how that tax works. But for these small taxpayers, it's a little messy, and it's really hard to get a fair way of collecting the tax. First of all, a lot of taxpayers don't know about it. And then second of all, some of these items that we tax are a little squishy. So for example, if you are a consultant and you have a physical office, you'll be taxed for the cost of your table, your chair, artwork on your wall, and anything you have in the room that's associated with your business. But if you work from home, how does that work? What if you don't have a desk and you're working from your kitchen table, and that's something that your family eats on most of the time, but it also happens to serve as your workspace? Do you tax all the property on your wall or the artwork on your wall in your home? Like, it starts getting really complicated. So we have a couple of choices in the Revenue Committee. We said, well, we can either, well, at least in my view, really spend some time and effort to go after these small taxpayers who are working from home, who've got these small items, make them aware, collect the tax. Or we could say, is it worth our time doing that? And so that's why you have this bill before you. I'm of the mindset that it's not worth our time. And so as we've done more research on this bill, again, the Park County assessor, Pat Meyer, who I believe will be with us today, he did a further breakdown, and we have taxpayers that are paying less than $1. There are about 550 of them. We send out tax bills for 6 cents. And so when you think about the cost of looking at the declaration, doing the calculation of what's owed, the cost of stamps, the time in your desk, we're losing money on some of these tax accounts. So that's what this bill does for you today. It would create a de minimis exemption of $2,400. And in the email, I showed you the calculation of how we reach that amount. $2,400 of fair market value times 0.095 equals 228 assessed value. And if you multiply that by the statewide average mill levy of 0.068, that's about a $15 tax bill. And please don't ask me to do more math. I'm an attorney. I'm not a mathematician. And so what this would mean for Wyoming is we would forego collecting about $47,000 statewide. And so I gave you as a hard handout, a sheet of what that means statewide. I didn't want to print out the copies that we have of what this would mean per county, but that is in the email I sent you. The other thing this bill does that's important to discuss, and I wanted to offer a few thoughts, is it changes the fine or the penalty for not reporting. And on that point, right now, you could be subject to a misdemeanor with $500 fine and 90 days imprisonment or both for failing to declare your personal property. And as we worked on this issue in the Revenue Committee, to our knowledge, no one has been prosecuted under this statute. So as we worked on this issue in the interim years ago, there was a suggestion that we move it from a misdemeanor to a fine. But you can imagine it started causing concerns. What's the appropriate fine for one of these large taxpayers? How much is enough to really get their attention? For these really small taxpayers, it seemed like complete overkill. This was actually a source of contention on the Senate side. People concerned about using a fine that might actually be utilized versus keeping it a misdemeanor. But I remember an oil and gas tax person who worked on this bill years ago, and he said, please don't make a criminal out of me. It's my job to accurately report our property that my company utilizes in the field, when the real threat to me is doing a bad job and getting my company implicated with a tax proceeding or some kind of proceeding with my county assessor. That costs my company time and money. And when I do that, it hurts my reputation and the reputation of my company. He said, that's my incentive to do a good job on these reports. So as you work the bill, I just wanted to offer a couple of thoughts on that. First of all, I did receive a note from the governor's office. Right now, we have those funds directed to, I think, the county's general fund. And sorry, I don't know that I even have a bill in front of me, which is kind of poor form on my part. But the governor recommended that we alter that and direct those funds to the county school fund. So if you decide to keep a fine in place, that might be an appropriate amendment. Oh, thank you, Representative. Alternatively, something I think that would actually make a lot more sense is to repeal the penalty altogether. As I mentioned, for the small taxpayers, it's overkill. For the large taxpayers, it's really hard to find that right amount. And for the taxpayers in the middle, and I don't want to speak for the assessors, but it seems that their largest tool is if a taxpayer isn't reporting, they can use something called best information available and assess what they think that taxpayer owes. And so I think that that's probably the more appropriate mechanism for them to start collecting the tax. As I worked this bill, I wanted to mention that there are a number of organizations who support it. The National Federation of Independent Businesses. I reached out to the Wyoming Mining and Petroleum Association of Wyoming. I think they did have some interest and concern about reducing that misdemeanor fine. And then your statewide Chamber of Commerce organization. Just one other issue I wanted to touch on before I take some questions is the uniformity of assessment requirement that's in our Constitution. That was a huge talking point that we've sorted through as a committee, and last year in the Senate, we've tried to give all taxpayers an exemption so that it's uniform in collection of this tax, but it got to be really messy. As I mentioned, if you're trying to give a $15 tax credit to a large oil and gas company, it's a pretty negligible benefit, but would create more confusion in how you administer it. So this is a very straightforward, if you're below $2,400 of fair market value, you don't pay it. And if you're above it, you pay it. Other states do this. And in the email I sent you, the Tax Foundation has done a really broad study of the fairness of personal property tax. And they've also highlighted states that have de minimis tax exemptions. If you look at our neighboring states, most of our neighboring states have this exemption. Looking at my closest neighbor in Colorado, they actually started out at a $7,000 exemption amount, but they have built-in inflation calculators in their statute. So that amount grows. I think it's closer to about 8,000 right now. I kept ours purposefully low so that we can start this trend of maybe freeing the assessors of having to worry about these very small tax accounts. Certainly, I understand the concern that what happens to your taxpayer who's at, goes from $2,400 to $2,401. Mr. Chairman, I think that that's a conversation for another day. It's kept purposefully low so that we're trying to reduce the administrative burden on these assessors. And so I'm sure you'll hear testimony about asking for an initial declaration. I am concerned about that because what we're trying to achieve is some resource and human capital efficiency within our assessor's office. So if you start saying, well, we just want to check in with you every year by sending you a postcard, you're starting to lose that efficiency of sending the stamp, having it in a database, having someone look at the postcard, putting it in a file. So, just something to consider, as I'm sure you might hear that request. But along the lines of fairness, I did want to touch on this. I've done a lot of research in this past year, and I think most people recognize that collecting taxes is an imperfect science. Certainly at the federal level, we have people that pay their taxes and then people who, are bankrupt, default, disappear. It's not perfect how we collect taxes. So the requirement that we have in our Constitution focuses on the term assessment. We have a duty to uniformly assess property. This bill doesn't alter that uniformity of assessment. We are still assessing small taxpayers at the same rate using the same valuation methods as all taxpayers. But it's the collection piece that's different. So I think it satisfies that constitutional hurdle, and recognizing we also have in our statute or our Constitution the ability to exempt certain items. And if you go through that list in your tax statutes, we've done it 41 times. There are 41 exemptions. And so if this were to be challenged in a court on equal protection or uniformity of assessment, I think we're fine, because what the test that courts usually employ is a rational basis test. Does the legislature have a rational reason for doing what it's doing? And the answer to me is very clear. It costs us more to administer some of these tax accounts than it's worth collecting. So I think we're fine on that front. So with that, Mr. Chairman, I know there are other people in the room that want to testify. I think we've worked on this issue for a lot of years. I think this bill, of all the ones I've worked on, gets us really close to threading the needle of finding that efficiency. And with that, I'm happy to answer any questions. Sure, Mr. Chairman. Yes, sole proprietors are supposed to declare their property. Every taxpayer is. The hard part is how do you get the word out about the tax? And so I'm bringing you one idea. I think there's more work to do, and it just depends on how much time and effort the state of Wyoming wants to spend on informing taxpayers of their duty to pay it. And I don't think there's a panacea of a solution. So ideas you could consider in the future, but please keep in mind this is a separate issue of an efficiency. I think that this lands us on saying, we're not going to collect taxes that cost us money to administer. But to your question about educating taxpayers, ideas for you to consider as a revenue committee in the future could include looping in the Secretary of State's office so that when you file your LLC or whatever organization articles you want, you have a duty to put a check on there that says, I am aware that I'm supposed to declare my personal property and reach out to my county assessor. You could, these are all done on our property tax assessment schedules. The hard part with that is, we could look to an annual system where that's administered by the state. So every year that you file your articles, you can work on that. That's a great idea. You could, yes, you could reach out. You could reach out to your banking community. And if they're opening a banking checking account or banking account of some sort, require that the bank tells them. So these are all things that you could do to, I think, better enforce and better improve. I've been stuck working on this issue. And so as someone who's stepping off the revenue committee, I'm happy to hand off that issue for your further consideration. But I think there is more work that can be done to notify taxpayers of their duty. A lot of people don't know about this. And when they find out, I think they get very nervous finding out that they could be held for misdemeanor charges. So
Mr. Chairman, I believe you're muted.
My mic on. Sorry for you folks out there. Can't remember where I was at, but I think, some states just don't even mess with us. And Representative Fortner's bill that we passed, it failed on the floor in the House, but it was really a broader issue. And maybe Wyoming, we have a corporate income tax for like minors and oil producers, we call it a severance tax. It's really a gross receipts or an income type tax. But what do you think of scrapping this whole system and going to like a corporate income tax? I mean, we've got our constitutional provision. You get a full credit on every other tax. You could set a minimum at like $2 million, I mean, so it's not the small business person, but we've got some gigantic corporations that money goes out of state every night or out of the country every night. And I'm just always, I don't know, this seems like a whole bunch of messing around for nothing, for not very much, to be honest.
I appreciate that, Mr. Chairman. So I would say it matters. I mean, you'll hear from at least my county assessor on how his staff is working overtime. And that is actually something I should raise. Our assessor sent some information to me. They sent out their declarations in March. They have people working overtime, working nights and weekends to keep up with the volume. This would reduce in Laramie County alone 1,000 tax rates. So to me, the value, but forego $6,000 in revenue. So to me, there's a straight out balance there. You ask a great question about corporate income tax. And so the reason I'm not bringing you a tax or a bill that would repeal business personal property tax altogether is, you tell me, Mr. Chairman, do you think a bill that would remove $134 million from our state's budget would pass this cycle? To me, I don't think that's a reasonable
Yeah,
ask.
no. I mean, you'd
But-
have to replace it in kind of a,
So to circle back though, to your point about a corporate income
Yeah.
tax, that's an issue I've been following, obviously, as a member of the Revenue Committee. And we haven't sorted through that issue. Right now, this applies to all taxpayers who have business in Wyoming. The approach with the corporate income tax that I've had concerns with is it seems to target just out-of-state businesses, and it sets a certain threshold of how large a business has to be based on a shareholder number. And I think if you start doing the constitutional analysis with that, you get in a lot more trouble. So I'd be nervous about repealing this in place of that until we've got that sorted out.
yeah.
And Mr. Chairman, will that happen next year? I don't know.
No,
5 years?
Yeah. I mean,
So this is a bill
part of
that's for you today. This is a
Sure.
bill that's going to provide relief for your small business owners this year. If we start now, and I just don't want to wait speculatively
No,
about
and
major tax reforms.
and I'm
when-
not going down a rabbit trail. This is a really good bill. This is one of the top 5 bills of the session, I think. I mean, along with Wyoming's Tomorrow, Gillette Community College, this one, these are good bills that are going to make a difference. And I
There are
think,
a lot of good bills, Mr. Chairman.
so what's that?
There are a lot of good bills, Mr. Chairman.
Well, I know, but there's some that are really going to make a difference for people. And this is really, I think, an important bill. So I'm not going down a rabbit hole, but we got a little time because this next bill, we're going to take about 5 seconds on. I just wanted to help some of these guys in their day jobs, get them here this morning up early. And, but anyway, I think it's important because you spent 4 years on revenue.
Yes.
And most of us are new. I spent 2 years back in the day on it. And I think it's part of this education process just for our benefit. But I think it's an interesting topic to think about how because our economy's changed. And this personal business property seems so anti-business, because why would I go out and buy some new tools or buy a new scraper? Or because then it's a disincentive for you to do that because my taxes are going to go up on. And so to make myself more efficient, to get better equipment in my shop, it's just, I don't know, seems silly. But then you say that 11th commandment, thou shalt not utter the word income tax. But I think it's an education piece. We got to talk to people. Hey, there's some businesses paying serious taxes in the state, and there's some that aren't paying any.
Sure.
And geez, I was at the Wyoming way. And I just want us to make sure we as a committee kind of at some point, we got to say, okay, man, put on my leader hat. Let's really look at this. And I don't know. So anyway, I guess I'll frame it as an attorney. Wouldn't you agree?
Absolutely. And,
Question?
Mr. Chairman, you bring up a good point. I had another handout that I provided you. The Park County assessor gave us just kind of a sample of one of what these look like. And so this would be an example of what a local carpenter would submit in his county. And you're going to see this gentleman lists a belt sander that he bought in 2010, a vacuum he bought in 2007, a circle saw he bought in 2004. And he goes through this list, and then they've got to value every single item. And so if you go through the 6 pages of this property list, you'll see how they reach the determination that this man has a total of $321 of assessed value, and you do the math, and he has a $24 tax bill. So to your point, my dad's a small business guy. He bought a lot of his tools in the 70s, and he's still taxed on them. And so it's a confusing tax to me. I
Yeah.
get it for some of the larger taxpayers with really big equipment, but it's really, I
just
feel
talking
strongly about
revenue,
this bill.
And, talking revenue, not to go down another rabbit trail, but I mean, you think about the wind tax, it's specific to that wind tower right there. And the company that provides a lot of power in our state, 6 or 7 other western states, pays an income tax in every state, except for Washington State. They're a sales tax state, but they pay a gross receipts tax. And someday I'll tell you some conversations with the president of that company, but man, I just think we got to kind of modernize what we're doing. And this is archaic. So hopefully this committee can move this personal property. Fortner started this conversation, but it's a worthy conversation on modernizing this. And I think your bill's a great bill to also keep us moving down that path. But anyway, enough of that narrative. And I'm trying to spark some questions. Representative Yin.
Mr. Chairman, I feel like this divider kind of keeps me separate from the rest of the committee, but Senator, thank you. My question ultimately is where did the $15 tax threshold come from the number of taxpayers essentially that we're going to be exempting from this versus a smaller number or a bigger number, et cetera? Mr. Chairman, thank you.
Thank you, Mr. Chairman. So I've asked our county assessors for years, what's that sweet spot? What's that number? How much time does it take? And so really it was looking, we tried to drill down on possible tax categories and where do we start seeing bang for the buck? So it was really a lot of just breaking out that big tax number. And, as someone, we've all ran campaigns, we've all stuffed mail, put stamps on, as someone who's done that work and just knows the time it takes. And that's not even coming up with the assessed value, just the time it takes me to put out like a $500 or 500 piece mailer. You start just kind of getting some of that intuitive. So it's not a perfect science, but that's kind of how we got to that number. We thought we were trying to look for something that was reasonable. And Mr. Chairman, one final point. I just want to be clear. I don't want to say that the County Assessors Association supports this bill. I think you're going to find county assessors who really don't like it and county assessors who do. And I just want to acknowledge that for the county assessors who don't like this bill, I respect their work. They're very diligent public servants. They will tell you that when they go to a chamber lunch or they see a new business pop up, an advertisement in a newspaper, they're on it. They want to know what that business is, what their equipment is. We've heard testimony about peeking in windows and looking at Facebook pages. And I appreciate that diligence. And it's, I think, because they have a fair, a desire to be really fair in how they administer the tax. And that's something I respect. However, I'm just trying to nudge folks to say it's not worth your time for some of these new businesses that are coming into Wyoming. So that's just a point that we won't agree on, and that's fine. But I just wanted to be very clear with you. I don't want you to think I'm trying to say the assessors love this bill, because some do and some don't.
Thank you, Speaker Hirschman. Senator Ellis, I apologize. I had to step out for a moment. I got a bill up. Needed to check on the status of it. But did you talk about that amendment we had discussed?
Briefly, Mr. Chairman, and just to refresh your memory, this is an important point. The governor's office did reach out, and if you decide to continue to use a fine, they would ask for an amendment that would clarify that the funds collected from the fine would be used in the county school fund. But I also did mention that is, I think, an important conversation point for the committee. What's the right fine? What's the right penalty if you don't report? And so I do think that there's value in repealing a penalty altogether. So something for your committee to consider as it works this bill.
Turn my mic on so folks can hear me. Thank you. Are there any members of state agency?
Yeah, Mr. Chairman, we have Director Noble. Would you like me to admit him?
If he would like to, that's part of the rule. You show up to a committee meeting, you got to talk. If you can move that cursor off my forehead, I'd appreciate it.
Sorry about that.
Thank you. I feel like Vice President Quayle in that debate. Okay, Director Noble, good morning, welcome.
Morning, Mr. Chairman, members of the committee. I'm Dan Noble, Director of the Department of Revenue. We really don't have any sort of position on this. It's obviously a local tax as it relates to the de minimis rules. We looked at our state assessed properties and there isn't a single one of them that would qualify for this anyway. So it's not something that we would have an issue with. I think the real concern is at the county level. Whether they feel that this is appropriate for them or not is really a decision they'll have to make. But I'll stand for any questions that anybody may have that we may be able to answer.
Members' questions, Representative Yen?
Thank you, Mr. Chairman. Director Noble, maybe this should have been a question for the senator, but do you know what difference the amendment on the Senate side made, where it said where it said actual value and it got amended to fair market value?
Mr. Chairman, Representative Yen, I don't know that it, let's put it this way, it's probably a term that is already defined, fair market value. So I think that's probably one of the reasons for going with fair market value versus actual value. We wanted to use a term that's that is something we can point to that's been defined.
Any other questions, the director? Similar, you heard the conversation, Director. My first question though, did you have your food taster this morning? We got to make sure he's protected. He's the most valuable state employee. Got to keep you safe. Okay.
Actually, I've been vaccinated for Pfizer, so both vaccines. So I think I'm relatively safe.
Okay. Very good. I very few people in our state understand the structure. Probably no one else, but so you heard our conversation earlier, and it's for another day and interim committee work, and we look forward to your input as we move forward kind of in this area. And what other states do. They do it at a state level reporting, or do we scrap this all together and kind of see some of those? So any comments on that? Or
well, Mr. Chairman, one of the things that you brought up was that the state of Washington has a gross receipts tax as it relates to some of those wind turbines. Well, essentially we do too.
Exactly.
The companies that are engaged in producing electricity from wind already pay $1 per megawatt hour of every megawatt that they produce in the state. So I think that's something to recognize, is that there is already an instance of granted, it's not a percentage of the actual revenues, but it is based on whatever they produce. Whether they make an income off of it or not, they're going to pay that $1 per megawatt hour. So it's very similar to what a gross receipts tax is. Income taxes themselves in Wyoming will be somewhat problematic because of the credits that are offered. It's unique to the state and it makes it challenging. Doesn't mean it can't be done, but it does make it challenging as it relates to who the winners and losers associated with the property tax credit in particular. There are those on the lower end of the income scale that will probably not be able to claim any property tax credit, even though the average that's listed in the spreadsheets that you've seen there demonstrate that they might. That's probably going to be something that will create winners and losers in an income tax. There's a lot of things that will have to be fleshed out if we choose to do something like that.
Yeah.
The issue of trading personal property tax being taxed at the local level under property tax versus trying another mechanism would have to somehow replace that revenue that the counties depend on, as well as the schools. So there's a number of things that would have to be looked at. One of the things that has made me nervous ever since I started estimating what an income tax would generate is how does it impact individuals? And I think that might be a really difficult thing to develop as we go forward.
Okay, thank you, Director. Any questions to the Director? Okay, thank you very much. Okay, we're going to move to public comment. on this bill. Folks in this room, and we've got 3 chairs, you can just queue up right here and we'll just, any folks that here in the room that would like to testify on this bill in favor, or if you have concerns, we'll take them all.
Go ahead.
Good
Mr.
morning.
Chairman.
Go ahead. Would you like to start? Go ahead.
Yes, sir, I will. Brett Molina's Wyoming Farm Bureau. It is actually with great pleasure I can come in front of the Revenue Committee and support a bill.
Another exemption. There you go.
No, sir.
Yeah.
Most of my members, it won't affect, I'll be
Sure.
honest with you. But the ones that I'm thinking that it will impact is some of my older members that have retired. They've kept the land. They've sold most of their equipment. But every farmer or rancher I know, and my family's guilty of it, we keep that one tractor because we need it for plowing snow, the garden, but it was great grandpa's. So we have to keep a tractor. But I do like the idea of this de minimis value. I really appreciate the removal of the potential jail time. The fine level is appropriate, I think. I will make the commitment of reaching out again to my members. I reached out through our Farm Bureau newspaper to say, hey, if you've got a business of any type, you need to be reporting what property you use in that business. And some of the comments I got, especially from some of the ones that were just starting out, what the hell? I got to do that. So I hope in my little way I did some good. With that, Mr. Chairman, trying to be as brief as possible, which isn't easy for me, but I would sit for any questions.
Any questions, Mr. Moley? Okay, thanks for joining us.
Thank you.
today.
Mr.
Okay,
Chairman,
Mr. Desai.
Travis Detai with the Wyoming Mining Association, and I would kind of echo what Mr. Moline said. This doesn't affect a lot of my members, but however, in addition to large mining companies, my associate member organization, we have a lot of small contractors, a little, a retiree that goes and sets up a little LLC so they can continue to consult on a with institutional knowledge. It does affect. So we fully support the bill. We fully support what the bill sponsor is trying to do. And we would appreciate your aye vote on this.
Okay, thank you. Any questions? Okay, very good. Mr. Obermiller.
Good morning, Mr. Chairman. Pete Obermiller, Petroleum Association of Wyoming. Mr. Chairman, remind me to talk to my board about changing my contract to billable hours in 10-minute increments, if you wouldn't mind.
Like
Mr.
school
Chairman, we support the
teachers.
bill. Appreciate the senator for bringing it and the committee for taking it up. Just a couple quick points, Mr. Chairman. I don't have the number in front of me, but I think we know from Representative Fortner's bill when we're talking about personal property for business, a very big proportion of that is paid by the minerals industry.
Mhm.
The de minimis exemption in this bill does not capture, for the most part, any of the personal property for business for my members. That's not really the issue for us. As the senator pointed out, we have large properties with lots of property, personal property, and the filings can be voluminous, sometimes in the hundreds for a single company to fill out for personal property taxing purposes. And we just appreciate moving to a system that doesn't create, if you accidentally miss one out of that 100, that you're not a criminal. And so I think you'll find it. I think Director Noble and the counties have testified before that in terms of reporting on this, minerals are not, have a very good record of reporting. That's not really the problem. So in any case, Mr. Chairman, we support. Happy to take questions.
Okay, any questions? Okay, thank you for your testimony today. Thanks for being here. Okay, morning.
Good morning, Mr. Chairman. Ken Gill, Laramie County Assessor.
Okay,
I can administer this proposal. There's no doubt about that. I've talked with my personal property people in the office. I think we can do it. It is true. I have 6 people working overtime. Well, they're not now because we sent out notices. So now we just have to fix the ones that we got late. So we did work overtime. We do have 7-cent tax bills out there. And if you just do the simple math, 50 cents a mailing, 3 mailings, that's $1.50 to collect 7 cents. So I think we can administer the bill. It would get rid of around 1,000 counts in Laramie County. I also appreciate the changing of the misdemeanor. I think that's very archaic language. I don't know that, I don't know what happened or why that ended up in statute, but something happened. But we can't find any record of anyone ever using that to prosecute someone. So something happened along the way, and I would stand for any questions, Mr. Chairman.
Okay, well, I appreciate your service. Appreciate you being here. Any
Thank you, sir.
questions? Representative Yen and then Representative Halliday.
Thank you, Mr. Chairman. So my question, thank you, Assessor, for joining us. My question ultimately is to justify the $15 number. So we're talking about a couple mailings, and it is on a per company basis. And I think the most costly part, of course, would be the overtime that we're paying people for every single one of these companies that we're sending out. Do you know about what maybe another a kind of flip question is also, is there an administrative burden of administering this new language? And what do you think that $15 number is an appropriate on a per company basis that makes sense to exempt? Thank you, Mr. Chairman.
Go ahead.
Mr. Chairman, I think the de minimis amount would really be up to this body to decide what is appropriate and what isn't appropriate. Would there be an additional administrative burden? I don't think there will be any additional administrative burden, at least in my office. I can't speak for all 23 around the state, but in my office, I don't feel there would be more administrative burden.
Okay. Any other Representative Halliday?
Thank you, Mr. Chairman. How many mills does Laramie County assess on these properties?
Go
How
ahead.
many apply to the assessment?
Go ahead.
Mr. Chairman, we send, it's around 4,200 personal property assessments yearly, and that would be business personal property, and probably around 400 oil and gas personal property.
Are you referring to the number of mills in your
Yeah, I just
county?
don't want to know how many bills are
Are you
applied to
70?
each one of these assessments.
Oh, how many
bills do you
mills?
Charge.
Mr. Chairman, is it mill levy? Well, it varies per taxing district.
Right.
So wherever the equipment is located, that mill levy is applied to it. So in the city of Cheyenne, it's 72.2 mills
Right.
in 2020. Whereas in one of the smaller fire districts, it might be 67 mills. So it varies.
State
on each
average is
tax
about
district.
68.
It
And
is.
I think
It is.
always a
Chairman.
number I've had in my head, but.
Thank
Okay,
you.
very good. Thank you. What do you think about the $10 fine? I mean, I don't know. I didn't hear it, listen to the debate in the Senate, but I think, I don't know, it seems pretty small fine to.
Mr. Chairman, it probably is a small fine, especially on a larger company.
Large account.
But on a smaller account, let's say the $15 tax bill, and they don't report, and it goes up to $500, so that's $515. That seems a little high too at that point. As an assessor, if I use the $10 fee, I would always use it. I wouldn't pick and choose. So I would either use it or I wouldn't use it. I don't think I want to go down that road of saying, yes, you're going to pay a fee because you were late, but you over here, you're not going to pay that fee. So I would either use it or I would not use it.
Yeah, that's part of the issue too, I think, is how you administer that. Okay, we'll keep working on that. Any other questions? Okay, well, appreciate you
Thank you, Mr.
this
Chairman.
morning. Okay, good morning. Ms.
Good morning. Good morning, Mr. Chairman, members of the committee. And thank you for the early morning trip. I did get to drive I-25 this morning. It was a beautiful drive.
Nice.
No snow on the road. A little wind helped me.
Any
but not
jackalopes?
quite enough. I was a few minutes late. So
No
apologize for
jackalopes.
the delay.
No
No animals. No.
jackalopes, yeah. Can you introduce your name and just tell us
You
where you're
bet.
from?
Dixie Huxtable, Converse County Assessor. And as has been stated, the assessors are not in agreement 100% with this bill for a variety of reasons. I'm here to talk about it as a Converse County assessor, and it is administrable. I think what you will find is that it could be administered differently across county lines. And that happens to be my biggest concern. So you talked about eliminating the 7-cent tax bill. a lot of the 7-cent tax bills in my county also is the same taxpayer that has $100 bill in another district. So because they have equipment spread over districts, that value has gotten split up, and those are not going to go away. So we're still going to have some of those bills. Ask if it was going to add additional burden. I don't believe so. I don't think it's going to relieve as much burden as some people think because of the administration of it. We currently send tax declarations out to every taxpayer, new taxpayers as well. The question I have is on the uniformity, when that rendition does not come back, and it doesn't come back a lot, in some counties more than others. I will agree that the petroleum industry is one of the better industries at reporting. They truly are. Unfortunately, the agricultural is probably one of the least efficient at reporting. We get the fewest reports from our ag people. When that report does not come back, is it going to be the assessor's decision that it's a presumed exempt? So they are under 2,400, so we write them off and we don't hear from them again. Or will it be the presumption that I'm going to use best available information and put a value on it that I think is there, and then we go through the appeal process to determine that value? So I think you're going to see some lack of uniformity. In the discussions of the committee during the interim, we talked about an initial reporting and then some subsequent rules promulgated by the Department of Revenue to help it be uniform across county lines. The sponsor of the bill did push back on that and did not include it, but that was a lot of discussion from the assessors. It's not the discussion of the de minimis amount, although some counties, it's more important to them. Those are struggling hard to find revenue. Losing any revenue is difficult for them. Some of the bigger counties, not so much. But the uniformity that if I have a taxpayer in my county that doesn't report and I consider them exempt, but somebody else makes them report or puts a best available information on in another county, a bordering county, how is that uniform and fair? And so that's the concern that I have in Commerce County, and I know it's shared by some of the other assessors. And to do away with the personal property, just remember that all that oil and gas equipment that you see in the state is business personal property. That is in this same category, every bit of it is. So to do away with that does away with all that, unless you come up with an alternative method to generate the revenue on that. So it's a big number in some counties, it's a small number in other counties, but it's an important process of our offices. And we all try to be fair and equitable and treat everybody the same. And I just want to make sure that any bill that comes out, we can still do that. And with that, I would stand for any questions.
Any questions, Vice Chair Henderson? And then Representative Baker.
Thank you, Mr. Chairman, and thank you, Dixie, for being here. So my question has to do with the area of accuracy and the idea of where we are now across the state in terms of making it relatively painless and straightforward for folks to report their personal property. How many counties have the capability of or use, if any, where if the inspector comes out and they don't see anyone at home, well, then the owner has the opportunity to go back in and report their stuff online. How much is, if any, is to that extent is it used across our state? Thank you.
Mr. Chairman, Representative Henderson, currently, we don't have a way for them to put it into our system online. I don't believe any county has that. However, some counties have instituted an online reporting system where you can go online. They will send you a notice and you can log on with a specific PIN number and then get some information that way. For personal property, it's very limited across the state because our system, our current CAMA, computer assisted mass appraisal system, is not geared for that in Wyoming. So it's not readily available for personal property. There are some options in real property, but not personal. As far as going out in the field, I'm going to speak for just Converse County. My staff is instructed to make notes when they're out in the field doing field reviews. of personal property they see. And then we come back and compare that to what's being reported. It is a self-reporting state. So if we find that we have, for example, an agricultural person, and I'm going to use them because they're the easiest to see, and they are getting agricultural status, and they have tractors and balers and swathers sitting there, we will make a note of that, come back and just audit it, do a desk audit to see if that's been reported. And if not, we'll reach out to that taxpayer. What other counties do, I can't tell you. We do the same thing on businesses. When we go in and go to a grocery store and look at the shelves or the freezers, or you go into an office building and how many offices are there. Because it is true with this bill, if you're a one-man show, your desk and computer may be under the $2,400. But if you're in a multiple office building and say there's five offices in there, when you do the cumulative adding of all those, now that person is taxable. So that desk was taxable in that setting, but it's not taxable in this setting. So we do those audits, not as frequently as probably we should, but it is something that's done. And I believe it's done in every county, just at different levels. And I hope that answers your question.
Okay, follow up.
Thank you, Mr. Chairman. Yes, sir. Yes, ma'am, Mr. Chairman. You did the right thing, and I got what I wanted, but what I'm looking at is the interim. And I'm wondering, is it time to take a look across the state at ways that we can think about those things that were mentioned earlier in terms of perhaps obstacles? I mean, and really try to leverage the technology and other things that are going on in the various counties, maybe benchmark the ones that are really working well and facilitate the consideration of those things that are working well, perhaps in other areas. So in terms of an interim topic, would you agree that would be worth looking at?
Mr. Chairman, Representative Henderson, absolutely. And the Assessors Association has agreed as a united group to be a part of those interim discussions in regards to business personal property. It is something that we talk about within our own association on an annual basis.
Sure.
And try to keep consistency, but to be a part of an interim as far as methodology on valuation, reporting, all those things, we would be happy to come to the table and be a part of that.
Thank you. Okay, Representative Baker had a question.
Thank you, Mr. Chairman. And Dixie, you mentioned uniformity and the cross-county concerns. Could you comment on the point that was made about the difference between the collection of the tax and the assessment of the tax and the constitutionality of that?
Mr. Chairman, Representative Baker, I'm not sure that I have the legal expertise to comment on the difference of those, because if we don't assess it, it's not being collected. If we don't put it on the tax roll, it's not going to the treasurer to be collected. And so while this bill says it's exempt, it's not taxable if it's under $2,400, then it becomes the assessor's responsibility, as I take this, to determine whether that taxpayer had $2,400 worth. And then we are charged with discovering it, valuing it, and putting it on the tax roll. So once we value it, discover it, value it, and put it on the tax roll, then it's due to be collected. So I think it does meet the constitutionality, as I agree with that, because it's broad for everybody, but you're not exempting the first 2,400 of everybody, because once you hit 2,401, it's all taxable. So I think that's where they tried to keep it constitutional with the Constitution. I'm just not sure the differentiating between the collection and the assessment, because once I assess it and it's deemed to be on the tax roll, I think it's the treasurer's obligation to collect. So I'm not sure that I understood that, but I'm not sure how to differentiate the two clearly.
Okay. I just had a question, about this kind of presumption really on page 18 of the bill. I mean, a person doesn't really have to say, they just quit paying if they under 2,400 now, is there a mechanism they gotta, or you're just gonna have them on the roll and drop them off? I mean, where is do they have to inform you at some point? Say, hey, I'm under 2,400, sorry. Thank you very much.
Mr. Chairman, that is my part of the non-uniform and a fairness part of this, is that no, they do not. And I think that it could be litigated. I don't know how it will work out if I have a taxpayer that doesn't respond, that doesn't return a rendition or doesn't report, is the presumption that they didn't report because they are under 2,400? Or is it that they just failed to report? I have the ability to go out and find it and use best available information. And I most certainly would do that in most cases. But if they don't return, it's going to be at the discretion of the assessor as to whether that taxpayer really was exempt, or it's just not worth my time to go find out if they really had $5,000 and just forgot to report.
Yeah.
There's not a mechanism in here right now to
I'm just wondering
differentiate
if
that.
there's an easy way to do that. I mean, just, as I look at that and on that paragraph 13 to just have to declare or.
Mr. Chairman, that was my initial discussion about an initial reporting on an, once this goes into place, everybody must report initially. And then from there, we could develop rules or regulations that would help us follow up. Maybe at the assessor's discretion, they do get to leave them off, or they get to send out a notice once every 5 years, they go to property once every 6, so that they don't totally fall off the radar and are lost forever, but we can make them inactive in the system and then reactivate them. That's what we were talking about in the interim, about an initial reporting and then some rules subsequent years to administer it. So at least there's some guidance across county line that everybody's doing relatively the same thing.
We probably won't be able to flesh it out this morning, but maybe it was just, if there's some interest in that. And then when we bring the sponsor back up, we can talk about that. It's probably obviously not the first time it's been talked about in this bill. So give us a little more background on it. And then, okay, very good. Any other questions? Ms. Huxtable? Okay. Representative Roscoe.
Thank you, Mr. Chairman. Ms. Huxtable, this is just for my own education. So if you have a company that works in multiple counties, and is it just sort of where the home base is for that farm or for that company? Is that where they pay for the tax on all their equipment that might be spread around multiple counties? Thank you.
Mr. Chairman, Representative Roscoe, there's a couple of scenarios though there. When it's involving mobile machinery and the machinery is moving from one county to the other, then it is the home-based county where they report, and then we prorate to those other counties based on either a monetary method or a time. They report how many days they're here or how much money they generate. So that's for equipment that moves from county to county. If they have multiple home bases, for example, they have a ranch in Campbell County and a ranch in Converse County, they would report that equipment typically to those counties separately. It's only when the mobile machinery comes into play, the construction companies, those service companies that move across county lines that need those mobile tags, where they report to the home base and then the assessor allocates it. Otherwise, typically it's reported to the home in each county. As far as a ranch is concerned, it would each ranch would report their own.
Okay. Any other questions? Okay, thank you for being here today. Representative Gray has a question.
Thank you, Mr. Chairman and Ms. Huxtable. So I want to understand a little more about this, what this looks like in terms of using best available information to assess this. I mean, there was a discussion about Facebook earlier. I mean, so how intrusive, I mean, looking at people's windows, like how does this work? I mean, I'm a little concerned about some of that. Just want a little more background.
Mr. Chairman, Representative Gray. So we are charged as assessors to locate and identify and value all taxable property in our county. And so one of the tools that we do is when we are out field checking, we will take notes of what we see. My staff is not authorized to peek in windows. So I want to make that clear for Commerce County. I'm not sure what the others are doing. However, if the door is open, we might see something that was open. As far as Facebook and social media, that tends to be the more common way people are advertising their businesses these days. So yes, we do a search of social media businesses in our county, as well as newspapers, radio ads, the placards on the doors of the vehicles. When we see a business that we don't have on our records, we're going to send them a notice and say, if you're doing business in our county, we need you to report your personal property. As far as best available information, I'm going to look at a similar business in my county, as much as I can and figure out what they reported and use that as a guide to determine what a new business or a business that did not report used. An example I can use is when a motel was built and that motel did not report their personal property after multiple contacts from my office. I need your personal property. We went to a similar sized motel with similar amenities and used what was reported as our best available information because they did not report. And I did not throw them in jail with a misdemeanor either, but I would have most likely used that $10 a day penalty if it was there because we had reached out to them multiple times. I would agree with my colleague that if you're going to apply that penalty, you would apply it uniformly. We don't want to be pick and choosing, but that would have been a time that if I'd have had the penalty, I would have probably applied it. But we use best available information. Taxpayer never did respond. So either I was right on the market or maybe a little less than what they would have reported. I hope that answered your question.
Just a question about the fine, about that amount. Your opinion on that? Is that, debate this, whether it's too high, too low, or Goldilocks just right?
Mr. Chairman, I don't know what the perfect number is. It's certainly better than a misdemeanor because we're not going to put anybody in jail, or we have not historically done that. For the beauty salon that was late filing by 30 days, a $300 fine might be a little bit more than I would want to do. But for the $1 million that didn't get reported, that might be appropriate. But I think it's important that it does say may. It doesn't say shall, it says may. And so at the discretion of the assessor's office, and if from my perspective and my procedures, it would be the number of contacts we've made. It would be, have we reached out? We try to call them if they didn't return. Did we reach out and they didn't respond? That might be the indication that we would apply a penalty after no response after 2 tries or 3 tries. So the dollar amount, I'm not sure. I think everybody could live with the $10. The assessors agreed to that as long as it had the word may, so that I'm not required to apply that.
What if it was a percentage? So it's a little tiny account. It's not much. If it's a big account, a little more.
Mr. Chairman, we did talk about that and ran a whole bunch of scenarios. The big dollars, of course, it made more incentive, I guess, to report versus the others. Felt like it was a little too complicated to try to administer, and the report that gets sent to the taxpayer has the penalty for failure to file listed on it. And so felt like that as a definition of a dollar amount was more appropriate than saying a percentage of, because then you wouldn't know what the penalty was.
Sure.
So it felt like the $10 per day was at least an identifiable dollar amount that could be put on there. So I do know that there is the ability or the perception that you could add 8% to that best available information. Maybe you reported 1 year, you didn't report it next. I'm going to use what you reported and presume that industry went up 25%, you went up 25%. And maybe that's enough penalty. There is some discussion about that.
Yeah.
It's good for an interim topic. I'm certainly open to that.
Yeah. Okay. Any other questions? All right. Well, thank you so much. Okay. Good morning.
Good morning, Mr. Chairman. Jim Willicks, President of the Wyoming County Commissioners Association. And for a simple little bill, this has been a fascinating discussion this morning because it raises a lot of questions that you have raised. That this is a global discussion and we're taking bits and pieces of it. I would just note that the Commissioners Association did not take a position on this bill. We're monitoring because it is a part of a county thing. And you heard from our 2 assessors and from the presenter that there isn't unanimity on this. But we are interested in, and as you go forward with any interim discussion on this topic, of course, the Commissioners Association will be actively engaged with you in this discussion. I did hear something new this morning that brought me forward. I wasn't going to testify. We get along really well with the chief executive and his staff, but I would push back gently on the amendment that was discussed about diverting the funds from the county fund to the school fund. I would not be doing my job if I didn't come forward and at least point that out, that we would resist that amendment. Other than that, I would just stand for questions, Mr. Chairman.
Any questions? Question, Mr. Willicks, I think, and I should have probably asked Ms. Huxtable. I mean, what are we going to statewide pick up $100 in fines, $1,000 maybe? I mean, it's not going to be 50,000. Right? Any thoughts? Ms. Huxtable's coming back up.
I will let,
Phone a
I would
friend.
gladly defer to my assessor,
Phone a friend on
Mr.
that.
Chairman.
Yeah.
Mr. Chairman, I really don't know because
Yeah.
we've not been tracking it to this point, so I don't have any data to really tell you. Certainly, if it was administered to every single person that was late filing in every county, it could be significant. Because a lot of them are late. As my colleague said, he's processing thousands of them at the last minute. They do have the ability to file an extension if they ask for it and in writing by February 15th. They are automatically granted a 30-day extension till April 1st, and many take advantage of that. So I just don't know. There's not a really good way to go in and find out what that would generate, but I would say it's not significant based on what my assessors say they're going to actually apply. I don't think they have any
Wouldn't you
intent.
amend that to say, I mean, currently like mills, just on average, about 70% of mills go to the school fund, 30%. I mean, maybe we can amend it that way or something.
Mr. Chairman, and I appreciate that. I think it's a county duty to collect that.
Sure.
And so I think there's a rationale that the county should be the benefit of going through the headache of all the things the assessors are talking about. So if that fine is implemented, I do believe there's a logical path that the consequences of it should come to the county fund. But I appreciate that logic.
And I think the thing with putting it to school fund, I think that we go home and we say, oh yeah, we directed another deal to schools. And I think a lot of sound and fury to signify nothing really.
As I
don't
said,
wanna
Mr.
get into
Chairman,
that.
I would not be doing my job if I didn't come up here and advocate.
So, yeah. Okay, very good. That's not going to solve our school funding problem.
It will not solve either of our problems, Mr.
Yeah.
Chairman.
Okay.
Thank you, Mr. Chairman.
Okay, thank you guys for anybody else here in the room would like to give public testimony on this bill? Yes, Senator Ellis. Oh, absolutely. We want to bring you back and follow it up. Absolutely, Senator. Are there any folks, and I'd like to first kind of have folks who are actually sitting in Wyoming somewhere today, if they're out there, to raise their hand.
Mr. Chairman, I do have two people in the Zoom waiting room. I'm going to admit Pat Meyer first.
Okay, perfect. And then if there's others that are outside the state, and if we have time, we'll take that testimony.
Good morning, Mr. Chairman, members of the Revenue Committee. Can you hear me?
Yes, we can. Perfect.
Okay, real good. I'm Pat Meyer. I'm the Park County Assessor. And I got some brief comments on this bill, and I'd be happy to answer questions afterwards. This bill is now about efficiency. It's to get rid of these little guys. And yes, if the guy goes over by 2 cents, chances are big deal, I think, I did do a study last year on all 50 states on personal property, and most of that documentation, a lot of it's in front of you. So I'm not a fan of the personal property tax per se, but of course we need something to get rid of to offset the 134 million. That is just a lot of money. So last year's idea was to give anybody with 35,000, everybody got a $35,000 exemption, market value. So that would have saved everybody a couple $100. Some people would have never had to. But anyways, that didn't work. A lot of the assessors had problems with that. So Senator Ellis this year was just going for efficiency. We had the data, $15. We knew how little money was there. We wanted to get rid of those dollar taxpayers. And just to keep working these, and you can see the steps, we send them out the rendition. They send them back. We work the rendition, put it in there. Then it goes to the treasurer's office. They send out the bills. Then they pay the bills and the bill comes back and so forth. And then if they don't pay, how do you get the money? Well, chances are you cannot get the money from these personal property taxpayers. If they don't pay the 5 cents, what are you going to do to them? And my whole reason for getting in this was the fine. Well, you can see where 96% of the taxes, even in 2018, we gained 125 million. The next year in 2019, just the big taxpayers alone, the 6,000 was 129 million, which was more than the total from the year before. So all these other taxpayers, the 30,000 or more, they're not even part of the thing. And what I did not want to have to do was start fining people for not reporting. We have been using our best information works like this, and I've been doing this for 36 years. If you don't report, we add 25%, figuring you must have added some stuff to your bill, to your tax assessment. But the good thing about that is we also send you an assessment schedule that said what your taxes were last year and what they're gonna be. And then a lot of times people will go, hey, I didn't add anything. I said, well, then you just need to report, and they get an amended tax assessment. So this has been working great for 36 years. I realize the misdemeanor and the thing has never been, nobody's ever done it. You'd have to go to your county attorney. They wouldn't take it on for you. So it's really it's a lame fine. It's never going to happen. So why bother changing it? I think the assessors have the ability, and if somebody underreports, which many of us have, if a restaurant reports $200 in equipment, we know they're not doing that. So we'll go to another restaurant, see what they're doing, and then apply best information that way on a situation like that. Again, we picked, Senator Ellis picked the $15 because we didn't want to make this into a big deal. This is an easy bill. I mean, as far as being uniform amongst other assessors, I can't worry about that. I have to follow the Department of Revenue's rules and the statutes for Park County. And we're just going to do what Park County does. I can't try to get all the assessors together on what they want to, on how they want to administer it, or if they want to send this out every year. I would say, let's get rid of the fine. Everybody should have to report when they open a business up at least one time. And we're good at finding them out and telling them what they need to do. We get sales lists from the Department of Revenue, sales tax list. We get paper articles. We find new companies and downtown businesses every year. They're not the hard ones. The hard ones are the really small ones that don't advertise, but they don't have enough personal property to go bother. And the same with auditing. We can't go audit people that are paying $15 hoping to get another $5. It's too time consuming and not worth our while. And we've done a study on that as well. Now, many states are giving exemptions. We have that material. Last year, the 35,000 was based on 13 states out of the 50 to come up with something. That didn't go through. This bill is just simple. It's for efficiency and to keep making these downtown people with a $5 bill, quit making them having to go through this trouble. And we certainly don't want to fine them. So with that, I would be happy to answer any questions.
Very good. Thank you, Mr. Meyer. Any questions? That was pretty thorough. That was nice testimony there. So appreciate, how many, 37 years?
36 years. Somewhere since 85. I don't know what it is anymore.
Bless your heart.
It's been a long time.
Appreciate your service.
Sure.
Okay. Any questions? Okay, thank you. Is there one more online? We'll take one more and then we're going to get to work on this bill.
Yes, Mr. Chairman, I've admitted Tony Gagliardi.
Okay, perfect.
Good morning, Mr. Chairman and members of the committee. My name is Tony Gagliardi. I'm the Colorado and Wyoming State Director for the National Federation of Independent Business. My Wyoming membership is right at 2,700 small business owners with the average employee size of 4 to 6 employees. We are truly the smallest of the small. I'd like to congratulate Senator Ellis for tackling this issue. It's one important to my membership, and it's simply a question of efficiency. When you expect a small business owner who's desperately trying to get back on their feet after what they've been through for the last year, and to pay for extra accounting time to even determine whether there's enough personal property to warrant paying a tax, sometimes that can run up to the hundreds of dollars. So we do support this bill with our membership behind us. It's important to them. And I think as a matter of efficiency, this committee would be doing the right thing and the legislature would be doing the right thing to pass this bill. So I know your time is running short and I appreciate the opportunity to stand before you. Thank you.
Okay, very good. Appreciate you joining us. Where are you sitting at today?
I am sitting in my office in Colorado.
Oh, okay. And we're out in Colorado.
I'm right outside of Colorado in Broomfield,
Oh, yeah.
or outside of Denver in Broomfield.
Beauty of technology. So we appreciate you joining us and really sorry about what happened in Boulder. It's just a shame. And
Thank you. That's about a 15-minute drive from us.
yeah. I actually talked to a guy last night, knew that the suspect when he was in school. And yeah, it's really, anyway, well, thanks for joining us this morning. Appreciate it.
Thank you, Mr. Chairman.
Okay, I think, are there any other hands? I'd like to close this, wrap this up. I think we're into saw and sawdust right now, I think. We about got
Mr. Chairman, that's everyone that was in the Zoom waiting room.
Okay, we are going to close public comment and I'm going to have Senator Ellis come up, any final comments, and then we're going to take a motion on this bill and we're going to go to work because we're over an hour now. So.
Thank you, Mr. Chairman. I just wanted to touch on a few questions to answer Representative Baker's question about the constitutionality. If you look at our uniform and assessment clause, there's one case that came out in 1987 involving Rocky Mountain Oil and the State Board of Equalization. And they focus really much on the words that are used in the Constitution. And they say the meaning is clear from the words used. At the time, we were assessing similar taxpayers with different assessment rates. And they took issue with it. They said the differentiated assessment ratio is impermissible. It can't be at a higher percent or value than the others. And so but the whole case focuses on the assessment rate. And so this, like I said, this is not changing the rate. We're not trying to give anyone a different rate. They're all assessed uniformly per county, per mill levy, right? So I did look at Colorado because they have similar language to Wyoming's constitution. If you study this, you'll see Wyoming, Colorado, we cut and paste a lot of what they did. But when they analyzed similar tax bills, they talk about the uniformity of assessment clause in Colorado and equal protection of the United States. And when it says, and on tax cases, this is more or less the law. It's well established that the legislature may classify for the purpose of taxation, so long as the classification is a reasonable one. And the requirements of the Constitution for equal protection are met when the legislative classification bears some reasonable relationship to a legitimate state interest and all persons within a class are being treated the same. And so this isn't picking and choosing winners. This is, are you a big business, small business? And we do this all the time. As I mentioned, there are 41 exemptions on the books. So this isn't carving out, looking at a particular industry. This is just looking at dollars and cents. So when you talk about just the reasonableness of efficiency, I just want to remind the committee, personal property tax, big issue. We can always do better on collection, but please just keep the narrow focus of what this is intended to do. And it's a very small de minimis amount. And please spend some time. I did send you in your email the map. Other states have done this. All of our neighboring states have this. We are an outlier. And so just keep in mind, we're not treading new waters. Other states do this and it's not a big deal. And looking at their de minimis amounts, ours will be on the very low end. And so you feel comfortable with this notion. So happy to answer any other questions, but I just would urge you to spend some time reading maybe that Tax Foundation report. There's a lot of good information in there as well.
Well, very good. Well, we appreciate your presentation today, all your hard work on this bill. Members, is there a motion on the bill? Okay, it's been moved by the vice chair and seconded by Representative Hallinan. Okay, members, let's vote the bill. Are there any amendments? Just a nice short little bill. Representative Gray.
Thank you, Mr. Chairman. I'd like to amend, delete page 1, line 12 through page 2, line 11. Obviously, there's probably some conforming amendments in the bill title. That's the amendment, take out the penalty and fine.
Well, I just want to repeat that again. I think that does something different than what you want. That takes out the exemption, what I just heard, I think. Go ahead and repeat your motion, Representative Gray.
Thank you, Mr. Chairman. Yeah, you're right, because then it goes back to the original language. Thank you, Mr. Chairman. Do you have any suggestions on that? Because then it goes back to the original. We just got to
Hey,
take
you want to
it.
withdraw
we just-
that motion?
Yeah, I withdraw the motion. So,
Okay. What are you trying to solve? What are you trying to fix in the bill?
well, it would just delete the penalty. So I guess what we could do is
I think
remove the amended language and then delete that statute. I mean, delete B, delete 18.3205B. I'll look it up right now, but I don't think there's anything there that.
Okay, is there a second on that motion?
Yeah.
Okay, is there a second? Is there a
So,
second?
so Mr. Chairman, sorry.
Okay, you have a second, Representative Jeff.
Just to be clear, what I'm doing, I'm deleting the amended language and then also repealing that section of statute. So
Okay,
that's,
I
so
think
we
we're
revert to nothing.
it's got a second. Any discussion? Representative Sweeney?
Not that I disagree, but I think we heard in testimony on the may word versus it being shall. So it gives great discretion to the assessors currently. And we also heard in testimony about the large players who 99.9% are playing by the rules. So it really doesn't, I mean, the way this has been amended, I feel I'm comfortable with. So.
Hey, any other discussion on the motion? Go ahead, question?
Thank you, Mr. Chairman. If you delete this, what's the impact of the deletion? What's the outcome? What's the net effect of that in terms of what the agency or the folks that assess taxes have testified to?
Representative Gray? I
Thank
think
you.
that was a question.
Thank you, Mr. Chairman. So, I mean, the effect of it is that the penalty goes away. I'm just looking at it right now. This is where we want to be at. Sorry about the error earlier. I mean, delete the amended language and then we delete the penalty in 18.3205. And so we repeal that 18.3205B, which says any person who fails to return any taxable property owned by him or under his control is guilty of a misdemeanor, and upon conviction shall be fined not exceeding $500, imprisoned in the county jail not exceeding 90 days or both. So instead of amending that existing statute to a $10 fine, we're just deleting it, which, you know, there was some discussion about. So.
Representative Yen?
Thank you, Mr. Chairman. So I do feel good about removing the idea that we would make someone a criminal because they didn't report this. I do feel very uncomfortable to not give the assessors any tools at all to let people report. So I think that the $10 a day probably won't ever get to $500. Just give them the option to be able to get businesses to report. I think is very reasonable, and it's a civil fee, and that's all it is, right? It's nothing more than a parking ticket.
Any other discussion? I think this is amendment's a bill killer. I mean, I just think it kind of guts the bill because we're trying to do the right thing for these little guys. And then how that could affect the whole ramification, the whole system, I think it's quite it's scary. In fact, I think we're trying to improve it. And I think anyway, any other questions? Okay, question on the amendment. All those in favor of the amendment, please say aye. Aye. All those opposed, say no. No. Okay, that amendment has not been adopted. Any other amendments? Members, I just asked you about the $10. Everybody good with that? I had a little more written down there, but I don't. Yeah, go ahead, Representative Sweeney.
Thank you, Mr. Chairman. So it's $10 a day. And it may.
Hey, yeah, I'm not gonna mess with it. Okay, any other amendments? Representative Gray.
Thank you, Mr. Chairman. So I'd like to amend page 2, line 11. Strike general fund, county, which is the election.
Representative Gray, I believe your mic is muted.
You. Okay, the amendment is page 2, line 11. Strike general fund of the county which makes the collection, and replace that with school foundation program account, SFP in parentheses.
Okay, I think the proper language would be the county school fund. That's where these fines currently go. Is that a friendly correction? Because it all flows together. It goes to the county school fund. If you recapture, it goes to the state. If not, it lowers the entitlement payment.
That's friendly.
Yeah, so I think that, okay, is there a second to this motion? Second by Representative Henderson. Any discussion? Question, Representative Hallinan and Sweeney.
Thank you, Mr. Chairman. I'd be against this amendment. I think we do. I think the counties, that's the place for this money to go as the representative from the county organization. And they're the ones that are going to administer this money. And I would say that they should be the ones that receive whatever fines are assessed. So with that, I would speak against this amendment.
Representative Sweeney, okay, thank you.
Ditto.
Ditto, okay. Representative Henderson?
Thank you, Mr. Chairman. The reason I second this was we had testimony that indicated this was a preferred consideration. And since the association of the county commissioners is sort of takes no position, I think it's a place to start with this going to the floor. So.
Okay, any other discussion? Representative Gray?
Thank you, Mr. Chairman. I just had the bill sponsor tell me that according to the governor's office, that Article 7, Section 5 makes some sort of requirement that this be deposited there, but I'm looking it up right now. So
I think, that is part of the issue, I think. All our fines right now. Okay, any other discussion? Okay.
Yeah, that's what it says.
Send another $100 to the schools. Right? Here we go. All those in favor of the motion, please say aye.
Aye.
Opposed?
No.
Chairs in doubt. All those in favor, raise your hand. 1, 2, 3. All those opposed, raise your hand. 1, 2, 3, 4. So that motion has not been adopted.
Mr. Chairman, can I just make a comment?
Go ahead, Representative Gray.
So, I mean, I just all fine. Article 7, Section 5 of the Constitution, all fines and penalties under general laws of the state shall belong to the public school fund of the respective counties and be paid over to the custodians of such fines for the current support of the public schools therein. That's the Constitution.
Okay. Thank you. Any amendments? Okay. All right. Any more discussion? I think we're ready for the question. Ms. Cruz, can you please call the roll? The motion is to pass. There are no amendments. Senate File 85, right? No amendment.
Representatives Baker,
Aye.
Gray,
Aye.
Hallinan,
Aye.
Henderson,
Aye.
Jennings, Roscoe, Sweeney,
Aye.
Yen,
Aye.
Mr. Chairman.
Aye.
Mr. Chairman, we have 9 ayes.
Do you have, okay, so we have a couple co-sponsors on this committee. We'll handle your bill. Thank you. And there's one other little bill, it'll be the top 4 bills of the session. There'll be that Senate File 60 that we passed in the 8-day session. So I think this Senate File 85 that was sent to us, I'm just trying to clear the deck, every bill, good chairman trying to work all the bills, right? And I'll put them in my drawer. I should have said that a few minutes earlier. Anyway, we don't need to work that bill because we've already solved that problem in our little 8-day virtual session. But I really just wanted to see all you folks show up today and appreciate it. And so that bill will just lay on the table and time will run out on it. We won't even make a motion on it. Okay, members, are there anything else for the committee? Folks in the room, anything? Doc Callahan has.
I just have a comment. I would like to, though she's not here anymore, I'd like to comment to say that presentation by Representative or Senator Ellis was an excellent one.
Yes, she did a great
And
job.
she really understood the issues.
She did a great job. Now, so we're going to adjourn. So can you turn the YouTube off? We are adjourned.